20th December, Tuesday. Alright, MAO with Kel. Get me a chair, guys. Mike Wilson from Morgan Stanley sees S&P 500 at 3,000. Oh my god, we are at 4,000, at somewhere around 4,000 or 3,009. To expect another to drop by 900 points? Serious, that's about 30% from here. I mean, I know that he's good. I know he's been accurate, but to see 3,000 is really something, a stunner. So guys, get your chair, stand by, and watch this, okay? All right, once again, thank you for the kind sponsorship aims, and of course, do your risk assessment, everybody. Make sure you do that. Yep, let's go. Now, before we go into all the details, right, take a look at this chart here. This is ARKK chart, all right? It's from normantrader.com. Now, Norman is a very good, Steve Hendrich is a very good TA guy. So I follow his Twitter quite a fair bit. And of course, when he was showing this, then it's like, hey, this chart looks familiar, right? I mean, as a trader for 20 years, I've seen this type of chart many times. The explosive, the slow startup first, and then the so-called final dump, so that they can pump, and the pump will be so crazy that it makes you think that if you don't buy right now at this point, you'll be a crazy guy. And of course, when the market pulls back and everybody thinks that the market is not going to go down anymore, bang, okay, all the way back to square one. Okay, so what I'm trying to say is this: we've seen this before, right? So let's see this again. Now, this is all the way back in 1721, right? My God, that was where the South Sea stock is. Yes, you know that. Okay, so what happened? You can see that this is like, you know, how the share price went up all the way and then collapsed down all the way. Now, at the start, everybody's in very happy, but usually at the peak period, that's where people buys a lot. And of course, history may not repeat, but often rhymes. So now we have this as a guide. Now, what if you look at this now? Singapore property prices, the private homes have went up by 3.8% in the third quarter, and it's like going to be higher in the fourth quarter. So when property prices goes up, so what happened? Naturally, you would think that, oh, that means that the whole economy is doing well and people getting richer, they might spending more money. Well, it is a good thing. It is possible. But on the flip side, you must understand that food prices will usually come in. And of course, now we just saw on Bloomberg, says that Singapore food inflation may double to 8.2% in the second half of 2022, which means that whatever you are spending right now, there'll be another 10% increment. All right. On your food prices. So let's say if your rice costs $4, you're at $4.40, right? If your rice is $5, then $5.50. So that is the usual, right? Okay, but then if you actually notice this recently, oh my goodness, okay? People are getting very pissed with their food, alright? Because, like example, like this nasi padang costs $5.50, and of course this guy said, I'd rather eat a McDonald's meal, okay? And this lady was outraged, okay? Outraged after paying $9.50 for her nasi padang, which is like, okay, I can understand. But the one that take the thing home is this gun. Oh my goodness. It's a Bedok store, okay? Bedok style heartland area. And it's this fish roll, tofu, and sambal goreng. My goodness, $24. I mean, we know that the fish roll is not cheap, yeah? But, oh gosh, okay, $24. So the lady actually was interviewed, okay, said that the fish roll cost about $10. So she actually charged about $20. My God. This is really incredible. So guys, if you don't work harder or get some money, stand by, you got to pay more, because I believe that food prices will just keep on escalating higher. And already Goldman Sachs tell you guys that, right? The commodity prices will go higher next year. And of course, that will lead on to the food prices. And you should know that it's coming. So stocks last night continued to slide as the Dow Jones lost 162 points, Nasdaq 159 points, and S&P down 35 points. So you can see majority was across the board. Primary was the technology company that was down, but of course there's some broad-based selling too. So all these tells you that what we warned you since last week has starting to manifest. And of course we can see right now the S&P 500 has covered the gap. Remember, I was calling for a sell right here. I said that I'll take a sell position here and aim here at 38.11. Okay, good, not bad. We have covered quite a bit of profit. So congratulations to those who have followed me in the account or follow you. Right, so where will it go lower? Likely we may see 3,700, but at least for now, for those who are short, do consider to book some profit. Now, for those who are in the Nasdaq, right, who shorted with us at 11,800, we're looking to see the covering up around here at about 10,960 area for the spot market. That will mean that you cover this gap, and of course by the TA it should be able to do that, because you can see now the moving average and the RSI shows that there's still a bit of selling pressure down the road. And of course, the Dow Jones, the one that everybody is shorting together with me, we shorted about 34,200 area, and down is down. It has broke below the Fibonacci level at this point at 33,800, and it came down to the nice level here. So now the only one that is going to hold the fort is at 32,480, and I believe that this could be a touch and go affair because the MA200 is just around the corner, and usually the MA200 is around the corner. You want to be more careful because it could be a make or it could be a break. If the market hit this point and recover, we may see a bit of temporary rebound because the market will be down for 4 days. But if the market continue to slide or they give no face to this MA200, then it is very likely to see the market going down below 32,000. So based on, again, on the current situation of the indicator right now, it seems that there is a fair possibility that the market can really slide all the way down, and that means that the market can go all the way below 29,000. Okay, so that's going to be very scary because we just walked out of it since October this year, and now we're going back again, and it's like approaching Christmas. Not a good thing. Alright, so thing is this, Apple is closely watched by many right now because everybody's talking about this growth trade conundrum. Alright, so all of them are saying that, right, the interest rate factor is there, the US dollar is there, the inflation is there. So how about growth stock, right? So apparently, CNBC had this interview. I think it's pretty interesting, and of course someone was asked about how they see about the big Apple in terms of the trend, because Apple now is very close to the low of this year, and of course breaking it might be a problem. So let's watch this video and see what he has to share with us. All right, just give me a moment. Okay, let me just bring back the chart in. Here we go.
All the pieces that should be supporting the sector seem to be falling into place lately. First, interest rates have been dropping sharply. The yield on 10-year Treasury is down 75 basis points from its October high. Traditionally, lower rates are good for growth stocks. Then there's a dollar, also down almost 9%, in fact, since September. And inflation, signs emerging that pricing pressures are abating. The consumer price index lower 5 months in a row now. All of that should give a boost to the growth trade, but not this time. The ARK Innovation ETF, for example, losing 2/3 of its value already this year and hitting an all-time low today. And it's not just the highly speculative names that are struggling. Apple dropping more than 1.5% today and is now just 2% from June lows. One of our traders tonight has a stark warning about just how much lower this one-time tech stalwart could go. Let's go to Chris Verone and his charts. Chris, what are you looking at?
Hey, Melissa, yeah, I think it's such a great lead because when we think about what's happened over the last week, everything has been so bullish for growth stocks, but they can't respond to it. Over the last 2 months, you have rates down, you have dollar down, you have softer inflation, but the big weights, especially Apple, unable to respond here. And I think what's really notable, the street still hasn't changed its opinion of the stock yet. There's 45 analysts who cover Apple. The stock's down 30 or 40% from the highs. You still have 37 of 45 analysts and a price target of $173. Everyone is still a buy on the name. I think you have to see more pessimism come into the name before it's viable. We think that happens lower. And when you consider the longer term picture here of what the chart is actually telling us, here's the last 2 years. I mean, this looks like one big rolling top formation to us. I thought breaking below that 135 level, which has been support really all year, is a very important development today, closing 132.37. And when you take a little bit of a longer step back, look at the last 4 or 5 years here when it comes to the Apple name. Think 12/31/19, before COVID. The stock was $75. So many of these big tech names have simply returned to where they were pre-COVID. That's 75 to 100 for Apple. And, if we take a step back and just look bigger picture, these names, these big tech names, these big growth weights are still too big. This is the combined weight of the 6 largest issues on 12/31/21 at the start of this year. They're still 25% of the S&P. I think ultimately this goes lower. These bear markets don't end until the best names get hit. That's Apple for us. I like 100.
100.
All right, this guy is looking at 100. Okay, so 100, where is it? Let me bring my chart to you right now. So if you look at my chart here, this is where we called for sell recently, all right, at about 147. You can check our MAO video. And of course, look at the way Apple dived down to 138 within 3 trading days. And of course, when you say 138 couldn't hold, the next target was 134 and the market closed perfectly there. And now last night, it closed below it. And now it's most likely going to hit the 130 mark, okay? And of course, the volume is kind of low and the indicator are all very bearish. So today, most likely we'll see 130. And of course, after 130, I suspect there will be a bit of bounce a bit here. Then we look at it further. But 130 should be the first support I'm seeing right now. 100, well, okay. All right, so that will be Apple. And let's just look at Elon Musk. Gosh, Elon Musk. Okay, so basically he has done his poll yesterday and the result has came out. The final result is that 57% of them prefer him to be out as the head of Twitter. So like he say, he will likely give what people want. So he will likely be out of Twitter, okay? And of course, before he goes in, he wrote some stuff and it's all again politics. Again, this one is a huge one. Those who want power are the ones who least deserve it. Oh gosh. Okay, so we all know that now he had just retweeted the FBI and the Hunter Biden laptop. Serious, guys, serious. I mean, I cannot imagine this, but it's going to get a lot of stick from the White House again. And with what's happening right now, with he being so close with the Donald Trump's son-in-law, and the thing is this, Donald Trump is going for the election. Okay, so maybe all these things is just part of the bigger picture to come back in again. So what do you think? All right. So Tesla yesterday pulled back further, it down to about 145. Then there was a bit of rebound yesterday and the volume was quite substantial in a way. So maybe we can see that this move by this Elon Musk might be good. But let's say if the thing is this, if still they need to save Twitter, because Twitter is still part of the Elon Musk portfolio, right? So if Twitter still continue to fall, then he may have to do something more on Tesla shares too. So who knows? We may really see the 138, which is the same price like what Apple has, I meant Apple too. So watch out for this. I think about 138 for short sellers, you should consider buying back your shorts, okay? All right. Now, Morgan Stanley, okay, this is the big one, the highlight of today. Morgan Stanley says that the US profit drop could rival 2008 era. Now, this is something that I mentioned months ago, and I also been telling you guys recently that I believe the earnings can't beat 2008. And of course, you can see now this is from Morgan Stanley Mike Wilson. He's saying that, my goodness, now we are about 3009, right? He believed that the worst case target for 2023 can go all the way down to 3000. Now, of course, take note again, worst case target. His previous one was about 3,400. So now it's been this the one that's the worst case is 3,000. So what do you think, guys? Do you think that we can drop another 33%? Serious? Wow. So the thing is, we will want you to understand that there's a reason for that. Their team is leaning now towards a bear case forecast for earnings to be hitting 180 per share versus the 231. That's a lot, okay? And implying that there will be more decline coming in. And this is not just only a systematic financial risk or sign of distress, but it means that he's saying that it will not crash like 2008, but definitely the downside is almost confirmed. So let us watch, hear for ourselves what Mike Wilson say and guess and think what can we do with your own portfolio. Let's go.
That there is any sort of meaningful re-entry into the market, into U.S. equity markets?
Well, I mean, look, I think that there's been attempts to do that multiple times this year. I mean, that's kind of what bear markets are all about, right? They suck you in probably at the wrong time. They whip you around from sector to sector, and just when you think you got it figured out, there's another trick for you. So really, we don't think that this bear market is over yet, mainly because our forecast for next year on earnings is materially below the street. Now, I know that's becoming a bit of a consensus view, but I think our forecasts are even below, kind of this new level that people are talking about. So we're at $195 for S&P earnings next year with a downward bias, and it could get worse than that.
Right.
And the thing that we've really been talking about, Romain, is this idea around operating leverage, how it's now working against companies, that inflation coming down is actually good for bonds and good for yields to come down, but it's not good for profits because it squeezes margins.
At 195, though, I mean, I'm just doing the quick back of the envelope math. I mean, where does that take valuations from where we are today? I would assume there still has to be a pretty significant drop that would actually bring us down to something commensurate with $195.
Well, that's exactly right. So, at 3,500, when we made that tactical bullish call, it was kind of, okay, we're getting closer. It's a decent level to be taking a swing here. But now back close to 4,000, we're talking about 20 times earnings again. And that's just the wrong price. Even if the Fed pauses, rate hikes, rate levels are much higher than where they were, a year or two ago. So it's really difficult to argue for 20 times being the right multiple. What is the right multiple? It's probably closer to something like 16 times. And that's why we think we can make new lows sometime in the first half of next year.
Oh my God, he's saying that first half of this year. Oh gosh, this is why I mean that this is really very scary, isn't it? So guys, do your own research. You all is Morgan Stanley, but he may be wrong, right? Well, some other people are bullish at the moment now. So just do your own risk calculation and see whether you actually agree with what he said. But for me itself, I kind of agree, because now we can see that real money funds are dumping as much as $100 billion of stocks on the rebalancing act. Now we all know that now people are actually moving away from equity market to the bond market right now to basically do their balance. And of course, we can see that not only one company, there's many companies are actually doing that right now. And of course, you can see that the world's biggest money manager poised to sell stocks to meet the targets. So the thing is this, people need to sell as much as $29 billion in equity to move around so that they can do their mix of 60% stocks and 40% bonds, because previously they were actually doing bond and debt, all right, more stocks versus bonds. So all this information tells me that I need to be very careful. And because Jerome Powell has already said that the interest rate will continue to remain elevated to tame inflation for 2023. So if this is to continue, right, it's pretty simple for JP Morgan to calculate that the Japan 1.6 trillion GPIF, all right, the world's largest pension funds, were to sell at least $17 billion for their target asset allocation. So all this movement as well will likely to be done the next few days, and that is where I believe the market is going to shake. And of course, now we just got the latest news that BOJ has decided to do some twisting on the yield side. That probably is one of the signs. I'll tell you more in short detail. And about the thing is this, the Fed discount window is rising. Now, what is this all about, right? So apparently now, if you see this very clearly, the last time we see something like this where the Fed discount window goes up, right, was 2008, and that was before the Lehman Brothers crisis. And then, of course, then we have it again, apology on the background voice, right? One more time was back in year 2020. That was during the pandemic time. So undeniable now is rising up again. So all this information tells me that something is just not right. And you don't need to be a genius to know this, but you can see right now that this facility allows banks to trade collateral using bundles of loans for emergency liquidity from the Federal Reserve. That means people are actually asking for it. So this is usually coincide with the darkest days of the market turmoil, all right, where the banks typically reluctant to tap the facility because that means that they have poor liquidity management or financial strain. It's like you borrowing your money from your mother-in-law. You don't want to use it because you really don't like to be reminded for your bad management of money. But if, let's say, you really got no choice and no one turn to, then you really have to go there. And then of course you're going to get all the nagging and stuff. So I'm not against all mother-in-law, but that is just only a synopsis, all right? So my point is this right now. This is not good, guys. This is really a very bad situation, and this may spread even deeper and further. As you can see right now, right, under the AOCI, okay, you can see on your screen right now. Okay, let me clear the screen a bit. The US banks have accumulated more than $770 billion of unrealized losses in their securities portfolio. Now, because the stock market has came down by currently by more than 15% for the Dow Jones, Nasdaq down by more than 35%. So all these are actually weighing onto that. So if the banks are actually losing money, I cannot imagine what happened to the mutual funds, the government funds, the pension funds. You cannot imagine that. So all these are telling you that we might have to brace ourselves, all right? But of course, at the same time, not everybody are bearish. So from this particular bank, let me just bring it in for you right now. Okay. The Christopher Smart from Barings actually says that nope, it's hard to see that 2023 as a down year. As a matter of fact, right, based on his chart, he believed that this is going to be the market will come down, but not as much, and then the market will recover. So you can see that not everybody is bearish. But again, I always say that Baring Banks versus Morgan Stanley, okay, let's think about this. Okay, now the big one just came out from BOJ just moments ago. Right, the Bank of Japan governor, all right, Kuroda, came in and shocked the market by adjusting the central bank yield curve control program, and it spiked the yen up all the way. All right, now do note he's going to step down soon. Yeah, so by doing this itself, right, it is not really a very good sign. All right, all these tells me that this is bad because of all 47 economists by Bloomberg expected no policy change. Okay, no. So when he changed it, look at the market, it just dive in terms of the dollar yen. So that means that the yen actually strengthened more than about from this case itself 500 basis point in just a matter of a couple of minutes. So all these tells you that maybe things are really going bad, and of course for him to bail out now, it really sent a really bad message to the financial market. So traders, you need to be very careful. Things may get really, really ugly. All right. So let's look at the chart for today and see what we have right now. I can see that the Dow is really coming down to the technical level that I mentioned. Oh gosh, the market has came down to my 32,549 target. Congratulations to those who are shorting with me together. All right, we've been calling for sell on the market, and we said that the Dow will come down to this particular point, 32,549, and the market has hit that point. Congratulations once again to all those who have followed in. All right, so as I mentioned to you guys that we need to watch out for the Dow Jones, and the Dow Jones has lost my KFC level right here. So now it's testing this point at 32,553. This is a KCB and it's touched. All right, so for traders who are short in the market, do consider take some profit, and let's see how low can it go. All right. S&P 500, NASDAQ itself has lost the KFC level right here. So most likely going to test this point here, and that's for 10,820 mark. Okay. And China market, as you can see today, has collapsed once again. It has failed to stay above the MA200 convincingly. Yesterday is a BNB reversal, so that usually means that there will be more selling to come. And truth be told, today you can see the China A50 has lost the support at 13,000, the psychological level, and now is testing the trend line, which is about 12,750. Anything lower than this today, we will see the China A50 coming back to 12,420. Now, I'm still pretty bearish right now for this market because I believe that there will be a further widespread of the COVID cases in China before most people get the virus, and then we have the basically we have everybody now being have the COVID virus in them, and they already they managed to recover from this. So maybe in February to March, that's where the full blown is over, the first wave is over, then this market will recover. All right, this is my personal view. So in my opinion itself, right guys, if you want to chase in a Chinese stock right now, wait for a while, let it pull back more. Then at a lower price, maybe somewhere around 11,877, that will be a very good time to buy in, because that will give you a triple bottom here. Okay. All right, let's look at the US market, a quick one right now. Wow, the Dow is continuing to fall. So with the Dow now coming down in this manner, most likely it may even test 32,225, the MA200 level. It may really test it. So it could be a touch and go. So watch out for this, okay? Now for the NASDAQ, as we can see on the screen right now, he has lost below the OP and MLP. So 10,861 should be able to reach, but the level that I'm watching now will be this 10,816 level, because that is the entire up wave here. Now for us, is how we learn this thing called KCB, Cal Chocolate Bar, how it goes up or how it comes down. So that means the market could actually touch 10,816 later today. All right. S&P 500, let's take a look. S&P 500 has continued to slide, and it missed the MLP just by a fraction. This is not a good sign. So most likely we will see the market coming down to 37.51. 37.51 should be a good base. It is a pivot 2 and a KCB stack. So 37.51 will be a good place to buy back some of your shorts. Okay. All right. So let's look at Hong Kong right now. Hong Kong market is down today, is below pivot 2. So below OP, below pivot 2 is always a sell signal. And let's get it in properly. Okay, here we go. All right, so we could see that, but there's a heavy stack around 18,849 to 18,925. So I believe that will be the first support, and it happened to be in line with the PMB support level. So this level here at about 18,700 could be a tough nut to break, okay? But if the market really goes below it, oh gosh, this is bad, because 18,191 will be next, if not 17,637. If the Dow S&P, according to what Matt Wilson said, will go down to 3,000, of course, it is pretty clear that we might see the prices going down even further. All right. Apology again for the background noise, because my kids are around. It's a school holiday. Okay, all right, now let's look at the Nikkei right now. The Nikkei has plunged below the 26,931 level. You can see right here, the market is down quite a fair bit. Let's check the numbers right now. It is down more than 600 points. The low NSL was down by 1,100 points. All right, and of course, the indicator of ours, KSI, has already indicated to us that the selling pressure has came in 3 days ago. All right, and today itself, right, the weightage is really not there, so which means that there is a chance that the market can go even lower. So watch out for this 26,361. That will be the first support. Adding lower than that itself, right, the market may really need to go down to touch base somewhere around here, which is about 25,850 level. Okay. All right, so that we have that for the DAX. Let's take a look now. The DAX yesterday continued to end downward because it tried to go up first but failed to stay above MLP, post back down. So of course the pivots are not ready yet, but the MA 200 looks very alluring. That means that if the market really pulls back significantly today, we may even see 13,452 in the near term. Okay, so traders watch out for that. Okay. All right, so that is all the equity market right now. Let's look into the gold and silver market. Gold and silver today is interesting. The dollar has actually came off a bit. Let me just bring the dollar chart in. Give me a moment, yeah. Where's the dollar chart? Let me bring it in right now. The dollar chart has came off. You can see that. All right, the low went down to about 103.96. But there's some buying coming in because you don't forget there is a reason to buy the dollar because of the interest rate factor, right? So maybe the dollar has pulled back, but that pressured down the equity market. But if the dollar recovers and equity market goes lower, then that means that there's something really bad going to go. You need to be very careful on that, yeah. Okay, so gold price went up initially just now to 1796, now has pulled back. Color change remain at red color. KSI is red, no blue bars, so there could be a sideways movement right here. The support is at 1779. The resistance today will be 1793, and today's an inverse pivot. Yeah? That means that the market will likely be bouncing around within these two areas. Now for silver prices, all right, it has went up recently to $24. Now it's pulled back a bit. I suspect the support will be at 22.15 level. Watch out for that for silver prices. And of course, we have to talk about crude oil. Yep, crude oil. Let me bring in crude oil for you. Here we go. Missed out earlier. Now, crude oil price is going to stay sideways for time being, in my opinion, because boys are buying, all right, and weightage is moving a bit to the positive side. But if the economy is come down, right, the crude oil might be pressured down. So anything below $71 will be a very good buy, in my opinion. If you're going to chase in right now, the risk reward itself is still okay. 75 buy, 71 can add one position. Upside itself could be $82, but if you ask me, wait for it to go lower. That would be a smarter thing to do. Okay. All right, last two will be Ethereum and Bitcoin. Ethereum now is did a strong reversal at 1157. That is a BNB support level, BNB extension. Well, you can see the buying has came in a bit, so that's what's happening right now because the dollar has came off. Now, usually when a dollar comes off, right, we can see that crypto will benefit a bit, but I can't see it will be able to benefit for long term. So you can see that now Bitcoin came almost down to 16,165 near to the BNB extension and now has recovered a fair bit, but the boys are still selling and the weightage is still downside. So if I were to see correctly, the dollar start to recover again, I believe Bitcoin will still pull back down, and I'm still pretty bearish. I still think that Bitcoin will hit 12,000 mark by maybe March next year. All right, that'll be all for today. Thank you for listening. This is a great video. So share with your friends, like it. Okay, I'll see you then again. Bye-bye.